This is Dan Dix here reporting for Press for Truth. And if you guys thought the WallStreetBets war on Wall Street was over, I think you might want to think again. Yes, the Gamestop stock GME is down today. It's had the low last time I checked of $57 today, which really could be a sign of the end of this particular short squeeze. But what might happen to this movement in general moving forward? This event has really woken up millions of people to the idea that this game is rigged. Or as I often say, the system isn't broken, my friends. The system is fixed. And now we have people looking outside of the box, asking questions like, what would happen in the event of a silver squeeze or a gold short squeeze? Or how about a pump into Bitcoin? What's that going to do to the big players who play this game? Well, joining us on the line to discuss all this and more is our friend Lior Gantz of Wealth Research Group. WealthResearchGroup.com is the website. Lior, thanks so much for joining us here today, man. Now, I want to get your thoughts. Yeah, I'm really excited to get your thoughts on where you see this movement, if you want to call it moving in the future. What do you think some more targets might be of the likes of the Reddit army? Who are they going to target moving forward? But before we talk about all that stuff, let's just start with what your general reaction was when you heard of this meme war, this meme stock war of 2021, and the fact that there's been this David and Goliath face-off on Wall Street. What's your initial reaction?
I think the one thing that's we can kind of compartmentalize the things that have to do with what happened with GME, AMC, and other stocks that were heavily bought in order to force the shorts to cover. The one thing that we need to look at are either big chats, forums, investor groups and whatnot, which I think is very, very healthy for investors. If you read the book from Ray Dalio, the world's #1 hedge fund manager in the past 30 years, you see that he conceptualized a term called idea meritocracy, which I think is a really good idea, Dan, because it basically plays into what you do in life. You interview people, you introduce them to your audience, and you let them think about the ideas that are discussed. In an idea meritocracy, there is no hierarchy. Basically what happens is you bring into a room people that have some idea, ideally an expertise on a given subject, and you let them debate the subject. And that way there is an organic fact checking. There isn't like a forced censored fact checking where the top guy says, nah, you're wrong because I'm the CEO and you're just an intern here or whatever. There is none of that. The ideas get float around, and then organically the best one, the one that makes the most sense, that everyone tries to poke a hole in, and there is none, or there is the least of, it gets to the front and center. And I think that's what happens in these groups. If you look at what hedge funds do, they try to bring big data and conceptualize a theme, a bullish thesis or a bearish thesis. And when you have thousands and hundreds of thousands of people freely exchanging ideas like this about a particular stock or stocks or a sector, it brings to light the best ideas in general. And that's what I love about these chat rooms and forums. They're basically mastermind groups, but for the people, instead of what I used to be, part of, where it's like the admission fee is like 20 grand a year, and you can mastermind with a few people. It's insane. It's insane. This is free, and so they do amazing research there because everyone shares their personal story with regards to a particular company. So that is very healthy. I love that, and that actually is why retail investors have outperformed hedge funds since March. It's really great research. There's nothing to portray them in CNBC and CNN and otherwise as children, as unsophisticated, like illiterate little people that it's such a mainstream bullshit idea. You know
Well,
what I
even
mean?
worse is they're calling this market manipulation. When I see it as just more of a contagious a move towards something, organic contagious move, but they're calling it market manipulation. Aren't they the ones who have been manipulated in the market? Aren't they the ones who have the propaganda channels and they can go on the news and spread the FUD and the FOMO and whatever it is they want to do to manipulate a particular stock? And when the tables are turned on them, they start screaming market manipulation. We all know they're the ones who have been manipulating the market, right?
So I think there are two terms we call manipulation. One is like the legal term, which is what the regulators look at. That's their way of looking at manipulation. And what a lot of people in the media deem as manipulation is not. It's influencing. You influence, just like anything that I say to you now may influence a viewer, and something that you tell me may influence. There's influencing is what everyone does every day of their lives, and it's a legitimate activity. We all try to persuade another person of our agenda and try to entice him to do something, right? So that's one thing. Manipulating the markets is something else. And so when you see what hedge funds try and do, where they take their bearish thesis on, let's say, GME and say, oh, this business model is no longer valid, it's in decline, etc. They put in a year and a half of research into it, and then they go and, like you say, they go on media channels, they go with to the analysts, to the investment bankers, and they say, I want to be on your show, I want to explain this. What they're trying to do is influence other people, other shareholders, to get scared and sell their shares. Now, that's not market, well, we don't have to get into it. But what I want to get into is that I saw so many talking heads on CNBC and Bloomberg and otherwise saying, these guys are doing God's work with their shorts. When they short, they expose many things. Like the idea of a short is to expose fraudulent companies, and it's just not that. These hedge funds are not there to try and expose managements that are doing the wrong thing. If they were trying to do that, they would call whoever needs to. They're trying to make money, and boatloads of money. So to call these short, something important, the only thing that's really important about taking a short position is that if you're a bull, you get to see the other side of the coin, and maybe if you're wrong, you can change your trajectory. So that's why I think shorts are a part of the ecosystem of the market. That's not the problem. The problem is when you short more than 100% of the float of the company. That's when you borrow more shares to sell into the market than there are shares in existence. I don't understand how that is allowed. That's something that, if you think about it, that is a derivative that is, I would say, embarrassing to be legal. Now, that's just my opinion on it, but I think that's a real problem. What happened in this scenario is that the bullish thesis for GameStop was that they were changing management. There was a great person coming into their board who had success with Chewy.com. He founded it. He sold it to Amazon. He took a 10% position in GameStop. He thought he had a turnaround story there. Then Microsoft came in and partnered with GME on something. So this is happening in the background since August. And then on top of that thesis, the people of Reddit started to understand, well, you know what? Not only is this turnaround story becoming more viable, here's the big short position that's on this stock. So we really have a chance of not only seeing a turnaround, but it's seeing short covering. And that's when they really changed history with what happened. I think that then you have to look at what Robinhood did and other brokers did when they restricted buying. This allowed buying for a while. And it's a big conversation about whether or not this was their only remedy. Because what people need to understand is that the brokers don't really make the trade. when you go and buy a share of Microsoft, the seller is not directly connected to your broker. And it takes 2 days to settle this. Now, this is a legacy framework of the financial system. In this day and age, with technology, we can settle trades. We can visibly settle them instantly. But the companies that do this, the market makers and the custodians, they don't do it already. It's a very antiquated system that has not changed in many decades. So it takes 2 days to settle. Now, you have to realize that what happened in GameStop, there were so many trades that they could not guarantee that they would settle 2 days later, and all these sellers and all these buyers will be still solvent. And then the broker has to take a hit. And if not the broker, then the layer above him. And that's why they had to raise billions of dollars. But I think this, look, at the end of the day, Vlad had the choice of whether or not to raise $1 billion or raise $5 and then all the restrictions. And he chose to only raise $1 billion because he wanted to protect his own position in this company in Robinhood, because he wants to take it public in a few months and he didn't want to dilute himself. So this is a really, there's a power struggle whether or not you're going to protect yourself and your other investors, or you're going to protect your customers. So, this is not black and white. Everything that happened here is, in the end of the day, it's a symptom of what we saw for the last 8 to 10 months, where people were cramped at home for 8 hours a day and trying to replace their lost wages, their lost income. They turned to the stock market, which is something that anyone can turn to and get access to. And what I think happened and is happening is that this Generation Z and the millennials are learning so much about finances, and are not only learning about them, but they had that aha moment that, man, if we don't take care of our own finance, who will? And so this is what I think is happening. And then lastly, there's definitely a part where they weaponized the whole thing. They were like, we want to make sure that these guys on Wall Street suffer. And they literally weaponized through GameStop and other positions. Many people there just wanted, to make a profit, but other people were there almost as a donation to the cause. They didn't care if they made or lost money. They want to be part of what's going on.
Well, some of those very same people are starting to now shift the focus a little bit off of the stock market on GameStop and focusing a little bit more on the big banks like JP Morgan. And I think that was the idea with the silver short squeeze. So maybe we can get into a little bit of the focus moving into the precious metals market. Is that a good idea to short squeeze silver and gold? Is that going to be beneficial to the little guy or Wall Street? And do you think that's what they're going to be going for next?
So I read and I saw a lot of controversy about like infiltration into the Reddit group of either hedge funds, like they would take a position in something like long silver, and then they would try to convince in the group through either bots or fake accounts or whatever you want to call it, that, there's a big short squeeze on silver. Okay, so let's leave that aside, all these theories, and just focus on the facts, right? The baby boomer generation are very much familiar with what happened in 1971 through 1980, where on the 15th of August, Nixon closed the gold window, and basically all fiat currencies were floating now against each other with no physical backing. Gold and silver became legal to own by 1974. Their free market price started to rise. I believe silver was $1.92 a share, 92 a coin or an ounce in 1971. By 1980, it was 50. And how did it happen? In the late 70s, two oil billionaires, the Hunt brothers, were starting to buy all of the available silver that they can get their hands on. They took a $3 billion loan at very low interest rates because they're billionaires. They convinced a bunch of other billionaires and multimillionaires to join them. And by the time it was done, they owned about a third 1/3 of the global supply of silver. They warehouse the whole thing. And the price just shot up. The government intervened, and just like with Robinhood and whatnot, they banned long contracts. You couldn't go long silver anymore. You can only short it. That started a plummet on what's known as Silver Thursday. The price just started to tank, and then the government even forced the Hunt brothers to unwind their position in the subsequent years. And the baby boomer generation remember that. Then in the financial crisis, it started to surface that JP Morgan and other bullion banks that are connected with the COMEX are doing trading that's either manipulative, suppressing. They're doing something that's not legitimate. And the CFTC took a full decade to look into it. And what they figured out is that the traders on the commodities desk for JP Morgan and other banks were spoofing investors. How do you spoof? You create demand on level 2 and level 3. These are levels that are not, that you don't see, but are there. They're traded like over the counter or otherwise. And then you see that, man, if I want to buy silver here, there's a big seller on the other line, on the other side. So it's probably a bad time as a trader to, but those big sellers are phantom sellers. There's not really a big seller there. It just looks like there is. And on the flip side, when you want to sell, if they're on the long side, then they show you that there's a big buyer on the other, and you're going to miss on a big. And for so, anyways, about a year or year and a half ago, the CFTC settled for $960 million fine from JP Morgan, and they actually changed the rules on that. Okay, so there's and by the way, Dan, we go into details on all of this on our newsletter on wealthresearch.com, and we follow the silver story. And I'm a big silver bull myself, and I can talk about why silver, in my opinion, has fundamental reasons to go much higher that have nothing to do with this instant drama that's going on. Love to share that with you, all the catalysts. Now, as it pertains to this short squeeze, in silver, there is much more paper contracts and derivatives and futures and ETFs that basically represent a supply of silver that's not in existence. In other words, if every person would ask for delivery for their futures when they expire, then there will be many more contracts than there are physical silver. That's one thing. But that's not a silver phenomenon. That's every commodity. And it's basically everything else in the financial system. So if everyone goes now to their ATMs and withdraw their life savings, the paper currency doesn't exist, right? So it's not something that's silver specific. It's for everything, because we're in a fractional reserve system on everything. Mm-hmm. The short situation with silver is that there's a concentrated short. It's not big. It's not a naked short. It's not 150, 120, 110%. It's not. It's small, but it's concentrated between about 8 to 12 institutions that have the majority of these shorts. So that's why there's a potential to short them, so to cause them to cover. Silver is too big of a market, mm-hmm. and there's so many restrictions on how many future contracts you can buy, and they can change these rules. And you saw in the 70s, the government will intervene if it's a commodity. It's I would say trying to force a short squeeze is near impossible with silver. That's not the way to go. Yeah. And that's not what happened in 2011 either. What shot up the price back then was a real fear of inflation, where people were willing to pay more for silver. That's what happened. Not people, just you and I, not like retail people, but institutions. There were institutions fearing that QE programs will cause real inflation, and they were willing to pay much more for silver, because heck, if there's a gold to silver ratio of 60 or 70, then silver makes sense, as today. So the long story short is, speculators got in, the price shot to what, like 30 the other day? Now it's at 26 because people have made a lot of money and they're out. So I think that's actually a good cleansing for silver, but these are not the real reasons for it to continue going up.
Right.
With regards to the general question of the Reddit crowd or any other forum, every big forum that decides that one thing is a good idea can influence and move markets.
Yes.
That's not debatable. The one thing I want to stress is, one thing is a good idea fundamentally, and there's another idea that, hey, let's just do something to make these people suffer. That's a different type of, that's not an investment idea.
Right.
That's more of a cause. I
Yeah.
don't know how to say it better.
Yeah, well, I think these people are seeing it as an important cause. And here's the bottom line. We're
Sure.
now in the 21st century here. We got millennials who are becoming savvy investors, and they understand technology moving forward. So let's shift into the idea, if they were to focus on Bitcoin. As you said, the silver and gold markets have been manipulated. We've seen that throughout the history of the markets. But what if, hypothetically, they decided to double down on Bitcoin, something that's a little less easy to be controlled by the government? Do you think that would be a good idea for the Reddit army to turn their focus on Bitcoin if they really want to screw over the big banks and the system and the man?
What does the system and the man have to do with Bitcoin, though? So,
well, the nature of its decentralization means that they simply cannot shut it down. They can't just come in, go to the head office, find the CEO, tell him to stop doing what he's doing.
okay.
They'd have to essentially destroy every node in the world, every computer in the world. So in that sense, wouldn't this be a bit of a safer haven, a bit of as a hedge towards the government?
Okay, I understand. So basically, what you're suggesting is that if we want to lower the control that governments have over our lives when it comes to currency devaluation and whatnot, should more people adopt cryptocurrencies in general and choose and elect to transact in that ecosystem instead of in the fiat monetary system?
Decentralized cryptocurrencies like Bitcoin and Ethereum in particular.
Gotcha. Yeah, look, I think that's happening. It's starting to happen. Most people that today own Bitcoin do not own it for the purposes of just living their daily lives with it. So that's a few years away. It could be like 5 or 10 years away, but I don't think the governments at this point, most Western governments, I don't think that's their aim, to try and shut down these decentralized platforms. I think I think they're behind in terms of trying to do that. It's irrelevant. I think there's much more understanding that the technology, that's the blockchain, especially the decentralized technology, it's out of any government's hands, and it's very global. If you look at demographics, Africa is the continent of the future. Its demographics are the healthiest. It's growing beautifully, and it's really leapfrogging the entire industrial revolution, and it's going like from third world to first world within the next 30 to 40 years. And I think for them, cryptocurrencies are going to be really important, and they're going to, because their currencies right now are basically useless. Most of them are undocumented, unbanked, and to them, fintech, which is what cryptocurrencies are, and all of fintech. So there's a lot of fintech going on right now in Africa, where on your phone you basically would have a bank account that would be Dan Dick's bank. It doesn't matter the name of the bank. Behind it, there's a big financial institution that basically is the real bank. But you and I can launch a company, go to Africa, and have a fintech company where people will transact, and we will make commissions, and the ecosystem will be backed by a real bank, a big bank, either in England, Switzerland, America, it doesn't matter. The banks are getting shoved out of the game of transactions. Banks are becoming much more of a store of savings as they were in the Middle Ages. Their tasks and roles are getting marginalized by fintech, and I think fintech is going to continue. The move is toward decentralization. The world is moving much more into an environment where things are instant. The technology of blockchain is much more instant. I think there are companies out there, if you look at fintech, that are going to do wonderful things for businesses, small and large. If you think about a bank right now and you go and apply for a loan, the amount of information that they try and get out of you is so basic that it's laughable. But there are companies out there that when you plug into their fintech, they know everything that's going on in your business. They know when your peak hours are, how much you're turning revenue. They know everything about you, and they will actually, using AI, will tell you, hey, next month, those bills are coming due. I think you should either think about doing this. They will start to give you suggestions and help you run your business. And that's the world we're going into in terms of fintech, in terms of big data, AI, etc. I think that's going to really help, the little guy, because when you start a business, man, it's a world of hurt. So I think that's the world we're going into. Fear of the cashless society, and that they can shut you down and shut your identity down and whatnot. In the bigger picture, that's not the reason to fear a cashless society. I don't think that is something that most people will ever encounter, where the government will try to intervene with their digital identities and whatnot, unless you do something really really bad. The world we're moving into is much more of a world of cashless society.
Yeah.
Bitcoin's value, okay, before we start talking about pumping up the price or whatever, Bitcoin's value is a derivative of how much its technology is worth. That is basically the price of a Bitcoin. So you take all the Bitcoins in existence times their price. That's the market valuation of Bitcoins. And what is that market valuation based on? What is the intrinsic value of Bitcoin? That's always changing, obviously. It is whatever the technology is worth. And how do you value a technology? You value it by its utility. So if Bitcoin is able to provide a lot of utility, then the Bitcoin market cap would be worth a lot of money. And the more people adopt to it and use it for various reasons, etc., and the more it proves itself, the more it will be valuable. Mm-hmm. If there's something else that will come along and do what Bitcoin does, in other words, do all of the utility and do it better, then that's where the free markets will flock to. Mm-hmm. But obviously, blockchain and Bitcoin are superior technologies to a lot of the things that we have right now in our banking system.
Yeah, for sure. Well, I'm still bullish on gold, silver, blockchain tech, and crypto in general, and I do see the future of this, as you said, moving into a digital currency world. And this is certainly inevitable and not something we can avoid. Now, you at Wealth Research Group have correctly pointed out a lot of the actual altcoins to look out for. I believe back in 2020, you had a newsletter where you had a wish list of about 20 altcoins that you had picked way back then. And today, all 20 are in the green. So that's really something that you should be proud of. So where can people go if they want to follow your next wish lists? And it comes to not just the crypto space, but gold, silver, finance, investing in general. Do you have projections for 2021? And where can people hear about that?
Okay, so you mean the watch lists?
Yes.
Not the wish lists.
Right. Watch list. Sorry.
Yes.
A wish list.
Exactly. Well, if you go to a website, on the top menu, there is a button that's called Watch Lists. And it's actually comprised of, I think, 7 or 8 watch lists that we've released since April of 2020. And those are made up of companies that we've looked into, analyzed, put the research forward. There have been some great successes in there that to put it mildly. Obviously, the entire market has gone up a lot in general. But yeah, that's the first place I'd go. We just released one 1 month ago. It had 4 companies in there. One of them is already up like 35% in 1 month. So that's pretty damn nice. And we're about to release our newest one next week for people that are on the newsletter. It's a free newsletter, so you can go to the homepage and subscribe for that as well, Dan.
Awesome. Well, you've given people a lot of food for thought here in terms of not just the turmoil in the markets, but what we ought to think about moving forward as we continue in 2021 with so much uncertainty. So thank you so much for taking the time to break all this down for us. I want to encourage everybody to check the links in the description below to find out where you can learn more from Lior at Wealth Research Group. Once again, Lior, thanks so much for talking to us today.
Thank you, sir. Thank you for the opportunity.
We all want truth. The truth will set you free.